The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am Darrell Martin, and I welcome you to the show. So now what you want to do is, if you haven't checked it out already, check out Tiger TV over on TFNN.com. Also, make sure you check out on your mobile phone, TFNN.mobi. You don't have to download any apps or anything, and it'll stream the live radio directly to you. Let's check out where the market's at right now. We got the S&P down 3 points. We have the NASDAQ up 5. The Russell's currently down 1.5 points. And then the Dow is down about 64. Not a whole lot of movement, a lot of choppiness going on in the markets right now. We got the gold markets right now. It's up $2.70. Silver is currently down less than 0.25%. Copper's down almost 0.5% right now. Oil is currently down a mere 29 cents, so pretty slow there. We got natural gas. It's up 1.5%. Not a big surprise. Oil or natural gas always been a big mover there. We got corn is up $1.75, not a big move. Soybeans up $1.50. We'll get on over at euro dollar. It is currently down 14 pips. Pound dollar is down 31 pips. Aussie dollar moving big, down 112 pips today, over a 1% move on the Aussie. Euro yen currently down 38 pips. US yen's down 19, with pound yen down 61. Dollar CAD currently down 14, and dollar franc is down 23 pips on the day. All right, so where are we at on our news trades and everything else we can do? And so let me go through that with you, so that way we put all the pieces together. So I talk about the news trades. I go into them in detail, step by step for you, pretty much each and every day right here. And we talk about what's coming up next. And so be aware, we do have the earnings report coming out today at 4:15. It's going to be coming out on Intel. And the Dow Jones and the NASDAQ, both, the Intel's in both of those indices. So, again, that's right at 4:15. It's when the wire is released. Now, the press conference may be later, or the investor phone conference, I guess, actually. Often is later, but the actual wire will be at 4:15. Now, this morning, what did we have? We had a potential trade over on euro dollar. And so let's look at the euro dollar and see, out of all the potential things we could have done, what would have been the results if we would have taken that specific trade. So I'll pull the euro dollar chart up, and you'll be able to see it here in just a second. And, okay, so that'll be loading over to your side. You got to see it here in any minute. And let's see. Okay, cool. All right, now that's up over there. So let's look, where did the market move this morning, from the news announcement, when it came out, how did the report come out? Again, that was on the core CPI that came out. It came out at a 0.1 on an expectation of 0.1. Unemployment claims came out at the same time, 326 on an expectation of 327. When you see those numbers come out, you're looking really to exit at break even as quick as you can, usually, just because that wasn't a big move in the expectation. But we still got a decent move. So let's look at what was the move size. And so we'll check this out, pre-news right here. And or this, we got a little more. Actually, we got a little bit more than that. I do that a little tight. There we go. We actually did get our 50 pips. So not as big of a move as we wanted, but we got 50 pips on it, and 80% of the time it is actually hit 50 pips or higher. So it stayed within that stat. The average range is only 60, so we only expected maybe 10 more pips out of the trade. On this trade, you probably could have hopped in the trade and potentially made a 1-to-1 on that trade, binary spreads. Another thing you would have noticed is if you had stayed in, okay, if you had stayed in the trade, is that it was like basically it moved the deviation high to low right when it hit this. Okay, so if you're using those deviation levels, even though it's at 0.7, from the low to the high was a 1 deviation move and is at a deviation level. So even though we expected 10 more ticks, you should have been looking to take profit right before that level. So if you did that, then that worked out well for you. You at least came out with some profit, if not, all the profit you're looking for. Big thing is, just seeing that come in flat on the announcements, as that thing ticked up, you probably would have hopped out at a break even. So even though that trade, came out, it worked, still would have been looking for a break even simply because, like I said, the report came in as expected. We're looking for fundamental shock. And that's one of those ones that, you may have missed out on the winning trade by hopping out. But more often than not, when it comes in as expected, you don't get necessarily that full move. And you just want to hop out of the trade. But either way, as long as if you hopped out, you got break even. If you stayed in and took your profit, again, right before that deviation line, you're just fine. You also made some profit on the trade. So worked out well. Hopefully a couple of y'all were able to check that out and learn from it. At least go in and do the trade on a demo account. Worst case scenario there, so that way you could learn how to do these and see the different pieces that come together. Tomorrow, what do we have coming up? Well, at 4:30, the British pound is going to be releasing its retail sales number. So make sure you're ready for that one. If you are up in the early AM, either way, just be aware of it, even if you wake up later, because that will have impact on the British pound. For most of the day, it'll have some level of impact, but definitely during that first couple hours, so 5:30 to 6:30. We're up to about 6:30, and the expectation on the move is about 70 pips within 2 hours, and over 70% of the time it moves 50 pips within 2 hours. So just want you to be awake and ready for that one, or just know what happened when it moved at that time. And let's see what else you also could do. Look at a potential butterfly on that trade on the euro pound. Do an iron butterfly where you buy a binary below and sell a binary above. And then after that, we're going to have the on the Dow Jones there, we're going to have General Electric going to be coming out with its earnings announcement. Is expected to be at 6:30. Okay? So again, its earnings announcement is expected to be at 6:30. And so just make sure you do look at what that did and how it did and how that might impact the Dow there on the open if you're coming in even a little bit later. So be aware that, that's a big, obviously, component. We'll also have the preliminary University of Michigan Consumer Sentiment Report. So, it's usually not a massive volatility thing, but it's one of the things, just, don't be surprised if there's a little hiccup, maybe in one way or the other that goes with it, but usually it doesn't have like this massive turning momentum, massive quick move off the report. But it's good to know it's there. Don't forget that most of the markets are going to be closed on Monday for Martin Luther King Jr. Day. So, take the day off, enjoy yourself. Don't try to force it. Just relax a little bit. But then Tuesday, we are going to have, a whole slew of economic reports coming out next week. Not economic, but earnings reports coming out. We're going to have Verizon's going to be releasing at 7:25 on Tuesday. We're going to have Johnson & Johnson coming out at 7:45. And that's part of the Dow as well. Verizon being part of the Dow. And then we're going to have IBM, also part of the Dow. That one's coming out in the evening, and the expectation is that comes out at 4:10. That's very important if you are trading at the end of the day, as that comes out right before, okay? Right before the market closes at 4:10. So the futures market closing at 4:15. So it's always good to know when those pieces are going to be released and how they could impact it. So, don't be trying premium collection trades at the end of the day, things like that, because there could be some big volatility right at that moment. Might even be a straddle or strangle opportunity. Make sure you go back and look at the Dow on the days in the past that IBM has been released before you try to make that kind of trade. Make sure you're looking at a continuous contract. If you use a Ninja, I think this one will just automatically make it continuous as long as you don't put a letter and number in there. Like if you don't put / YMH4 or whatever. If you just put / YM, it'll automatically make it continuous. If you're looking at NinjaTrader, you need to put in, you'll have to add this to your instrument manager, but you just add in YM and then choose on the month, go down and manually select YM and then space ###. So that makes it a continuous contract. But the continuous is historical data. It's not going to be live. So it's going to be delayed. So you don't want to be watching that chart live on the continuous on Ninja, but unless you have an added subscription for it, where you're paying like for IQ feed or something like that. But you do want to, like I said, going back and looking at it. That's the way to go back and look at it. And let's see, what about any kind of straddle trades coming up next week? Well, the one I've got through Tuesday so far on crunching everything. Aussie dollar CPI number coming out at 7:30 on Monday night, and we're basically looking for about a 50 pip move with a 75% average of moving 50 pips. So you might be able to pull off a nice straddle or strangle trade right there on the Aussie dollar on Tuesday evening. And that is the market news summary for the week. We've had a pretty good week where we've been going through and we've been talking about straddles and how to determine what break even is. Yesterday had a caller come in and we talked about break even, and after we discussed it a few times, the simplest way to determine break even was simply, if I, on my buy side, what price did I buy the spread at? What was my risk on the sell side? All I need to do is make my risk on the sell side above where I bought. So if I bought at 36.10 and I have $10 risk on the sell side, then I need to sell at 36.20, make 10 ticks. That's break even. So that was the quickest way to determine break even on a straddle trade. Like, so if this morning on euro dollar you decided to get out because you saw the numbers weren't impressive, then you could easily just look at, okay, where did I buy? What was my risk? Add that to it. Edit my take profit order down to that, get out. You'd have no problem getting out on that trade. So especially as long as you chose like 10 or 11. If you chose 9, you probably still made it, just depending upon what your prices were. So I do usually recommend that you try to get 10 or 11 because all the stats I'm quoting are 2 hours. So 9 would only give you 30 minutes. 10 gives you an hour and a half. And 11 obviously gives you more than enough time. You even got 3 p.m. potential expirations you can look at as well. But anyways, that I had to give you your market wrap summary right there. We also talked about binaries, and we said, how do we know if it's better? And so what we did is we said, well, what's our take profit on the spread? And based on our take profit on the spread, can we get a strike that is, at or closer, ideally closer, for at least at or less, ideally less risk? And if we can't, if it's not significantly closer, significantly less risk, or both, ideally, then the straddle is always preferred, because the straddle has an intrinsic value. It's like a call that's in the money, okay, or a put that's in the money. It has an intrinsic value. So even if you lost all your time value, you could still, potentially recover some, if not all, that loss, and it's a lot easier to get break even, a lot more difficult on the binaries. And the other factor to consider was, using the simulator over on the scanner, is how far do we expect the price to move on a quick move on the binary contract, on a quick move on the underlying market. And if I put that at the same take profit price, would I be able to hit my 1-to-1, or could I get it a lot faster? So how soon can I get my take profit? How close can I get my strikes? And how less risk can I get my strikes for? All three of those determining if the binary is better or not. Often the spread will be better, but every once in a while binaries work. All right, we'll come back right after this.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So we got spreads down. We got binaries or straddles down on spreads. We got strangles down. Now let's talk about doing butterflies, okay? Because we have a potential butterfly tomorrow morning over on the euro pound. So if we were to do a butterfly on the euro pound, so let me first pull it up. Let's see, I need to actually add that one in to my instrument manager. So if you have Ninja, I'll show you how to do that. It's pretty simple. Just go to, every once in a while I'm editing my list around so they can get changed up. Just go in and type in what you're looking for. Hit search and then click it right there. It'll be right on your default list. Now you can also just type it on the chart, but it makes it easy to have it built in. So if you're going over here to euro pound, pull it up, and you can see, it's really not the most volatile. It'll move a deviation, but a deviation is pretty small. It's like 30 ticks a lot of times. Let's see, what is it today? Today, it's 37 ticks. Not a big move at all. On it. So we got the euro pound here. How are we going to pull off doing a butterfly on it in the morning? What would be the pieces to do to, make this thing work? And so let me pull that up and I'll show you. The basic concept of a butterfly is pretty simple. All binaries are worth $100. Okay? And when you buy a binary, you're saying the statement is true. Like, Euro pound will expire greater than 83.10 at 3 o'clock. So if you do that, that would be if you buy it, you'd be saying that statement would be true. Or if you sold it, you'd say the euro dollar will not expire greater than, it'll expire equal to or less than 83.10 at 3 o'clock. So you could sell it or you could buy it. Now, if I sell an 83.10 right now, the market, being over here is at about 83.19. Well, the market has to move down 19 ticks for that sell to be accurate, right? Because if I said it will not be greater than, I'm saying it'll be less than or equal to 83.10. The market has to move 19 ticks. So the probabilities are against me because the market has to move for that trade to be profitable. Now, it doesn't have to move 19 ticks. It has to move 19 ticks by expiration and be below there at expiration. Then I get max profit. If it moved down 10 ticks and I took profit, that's fine. Okay? So you're not just saying at expiration. You could actually, you could just be saying direction. And if it moves some, you take profit, you get out. But no matter what, it has to move. Okay? Now, if I said it'll be greater than, and I'm just throwing a number up, 83.10, then the market doesn't have to move. It's already greater than 83.10. And it could stay flat. It could move up. It could even move down. As far as I wanted to, as long as it didn't expire lower than 83.10, or if I managed my risk and got out if it hit 83.10, I could at least have 18 ticks or so of room where it could move down, stay flat, or move up. In all three cases, I could be profitable on the trade. So you can think of this like doing what's known as like a credit spread on options, except for you can do it every hour, every day, multiple times a day. And so we'd go over in the morning and we'd look at this actual trade. And we'd go, okay, well, trying to drag my screen on and it keeps going back to the other one. Here we go. One more time. I think it's too big on the other screen. Shrink it. Bring it up. There we go. All right. So we're going to go down here, and we're going to choose the Euro Pound, and just start off with no filters. Okay? Scroll on down, and I can see what exists. And I go, well, I'm not going to be willing to only get a $4 credit, so I'm not interested in anything that only has a $4 credit, and I could put 5 to 95 and see if anything even shows up that looks potentially favorable. I actually don't have anything until 11 a.m. The thing's so flat, like 11 a.m. tomorrow for a potential butterfly. Now, again, before the news, it could greatly be increased and there could be a potential trade. And so if I could find a trade, then what I'd be looking for is then I only want in the money contracts because I'm going to do a butterfly. That's going to wipe out even more. Okay? And so I literally will go through all of these steps until I find the right butterfly within the range that I'm looking for. I'm just trying to see if there's anything we can even potentially do. And I'll search through these real quick for you. When we get right back from the break, we'll go into it. I actually found another one that's a little bit closer. So stay right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And got a caller right now. We got Dennis from Buffalo. How you doing, man?
How you doing, Darrell?
Hey, doing great.
Hey, I had just a question. I want to make sure I wasn't doing anything wrong. Yesterday in that Australian employment change news that came out at 7:30, I was scanning using the scanner. It started at 6:30, but I didn't see anything. Did I do something wrong? Was there a trade? Because I didn't see anything as far as a spread, and it was a $25 total risk, I believe, on the trade. Did you see an iron condor line up instead of a straddle on the trade?
Right, you're talking about like going in last night and trying to find a good trade that lined up for. Now, did you look at? Obviously, you only had the 11 p.m. expirations on. I guess you had 8, 9, and 11.
Right. I believe the news it said to use the 11s, and it moved approximately 90 pips.
Yeah, I mean it was a massive. Like, let me pull up the chart too. We'll go through it. Okay.
Okay. Thanks.
Yeah.
Sorry to change the subject. I know you're doing butterflies, but I just...
Oh, that's fine. So no, I mean it's the whole point of the show is just to help everybody learn. So if that's what's happening, then it's working. All right, so I'm going to pull up that we had that nice big move. Let's see here. But let me go over here. Right there, it just dropped off, and we had a high to low. Till the, I guess the high to low would be right. It actually hit the low pretty quick. we got 95 pips, pretty much from like release to low, high to low.
Yeah.
And give or take a couple.
Okay.
And then, so yeah, on the spread scanner, this is how I don't know how you had it set up, but what you should have done is went in and clicked on just Aussie dollar. Okay.
Okay.
Put $100 max risk and a 1 minimum reward to risk ratio.
Okay.
And the 11 o'clock, the 10 o'clocks, the 9 o'clocks, I guess it's 7, so it would be 8, 9. So yeah, the 9, 10, and 11 o'clocks, they all came out at 6. Now there's a little bit of a drop. Okay? I guess the 11 o'clocks came out at 6, which would have been right here. So we had a little bit of a drop off the 6 o'clocks before the news. And then 1 hour after that, at 7, you would have had the 9s. So you pull that up, and then you do. So did you do this? Did you do like reset all your filters and then put 100 and then 1?
Yes. I had an 8. Well, that was an 8 o'clock spread. On the 11 o'clock spreads, I had a $17 risk on the sell side, and I had the lowest was $27 on the sell side, and I had on the buy side on the 11 was $92. So that was way out of the range. That's why I was wondering if I did.
You had a risk of $92 on the buy side, or you mean you had a break-even distance of $92? I don't think, how would that be $92?
I'm sorry, the max risk on that side was $92 on the buy side for the 88.10 to 90.10 spread, the 11 o'clock spread. The max risk was $92 on that, and the max risk on the sell for the 87.10 to 89.10 was $27 for the 11 o'clock spread.
Wow. Okay. I wish I would have saw that.
I have a screenshot of it. I saved it.
That'd be awesome. Yeah, you got to email it to me.
Okay, absolutely. The filters were set. I'm looking at the filters. They were set correctly. So that's why I was wondering if I did something wrong. If I was looking for an iron condor.
I'm shocked it was 80. Yeah, that would have been an iron condor. I mean, I'm surprised it was $92 risk. What was your floor and your ceiling? Actually, if you just give me those. If you have the screenshot, so you have all the numbers in front of you right now?
Yes, I do.
Awesome. Let's go through it. Let's walk through it step by step.
Where would I find the floor on the? I'm trying to find it.
If you're looking at the screenshot, the floor and ceiling would be like right here, like right inside the name of the contract where it says description. Okay.
Oh, there we go. Okay. Let me go back there 1 second. Okay. It says 89.22 to 89.26. And then that was the buy, and then on the sell it was 88.83 to 88.88.
Okay, let's say that one more time. So we had 89.22 to what?
To 89.26 on the buy side.
Okay, that's your bid and ask.
Oh, I'm sorry, that's the bid and ask. Okay, you want the actual spread then?
Yeah, what's the spread?
Okay, sorry, 89.10 to 91.10 on the buy side.
Okay.
And then on the sell side, 87.10 to 89.10.
Okay, so we got 89. Okay, that's what I want to make sure first that we had common floor ceiling. Okay.
Mm-hmm.
So we got 89.10 right there. And then, okay, now what was your buy price?
The buy price on that was $16. Was the max risk.
Okay, so you bought that one for $89.27.
Yes. Let me just double check that 1 second. Sorry.
For $16, it could be $89.26 if you bought it for $89. Yeah, so $0.8926 if you had $16 max risk.
Yes, that's correct.
Okay, and then what was your? If I can type correctly, what was your sell price?
It was $27.
Okay, so 27 ticks below. We got 87.
Mm-hmm.
Is that right?
That's correct. Yes.
And then what time did you enter? What was the indicative at the time you entered? What was the Aussie dollar trading at?
The indicative was, let's see, I go back. It was approximately about 89.04 at the time.
Okay. So you had a $39 total risk on the trade.
Correct, yes.
Okay. And now the issue on this trade is this was a much larger than expected, which is actually usually a good thing, right? But it's a much larger than expected move. Like our average range on the Aussie dollar report is 50 pips. Okay?
Correct,
on the employment change.
Mm-hmm.
So the issue you would have had on the trade was when you looked at it and you're like, well, by the time I take profit, I should be taking profit on my buy at 89.88, but I only expect it to go up to 89.54 from where because it's at 89.04. I only expect it to go up to 89.54.
Mm-hmm.
And then I sell at 88.32. Well, I only expect it to go down to 88.54. So to take my 1-to-1 profit on this trade, I'd basically have to expect that kind of move. And so the actual movement we got, let's see, what kind of move would that be? Yeah, that basically says you'd be expecting a 70 to 80 pip move, like a 72 to 84 pip move in either direction, which was not expected. I mean, that was a massive mover right there. So on the 11 o'clocks, like you would not have had a trade. So it's not that you messed up. It's just the market happened to move a whole lot more than normal. If that makes sense.
Exactly. Okay, I got you. I just want to make sure I.
Right. Basically, you shouldn't have taken the trade based on that because it was too expensive based on the move you expected. Okay. So even though the trade worked, it would have worked. It's nice that it would have worked, but you did the right thing by not taking it because it was too expensive based on the consistent expectations.
Okay.
So that was accurate. Now you could have went back. I mean, the 11 o'clock is the preferred because it gives you the time. But, I mean, you also could have looked at the, at 7, you're going to have the 9s. So you have like 8, 9, and 10, right? So you could have looked at the 9s. I mean, it's an hour and a half. And saw, was there something there? It's just, obviously, you're giving yourself a lot less time to let it move. But, obviously it did. A lot of times I do end up choosing like hour and a half out if I can't find the ideal 11 o'clock spread. So that's just maybe a little, note to remember is, if I can't get the one that's 4 hours out, because a lot of times the Aussie takes a while. This is like very rare. Even when it does move this big, a lot of times it'll take hours to get there. Okay. And so that's why I like the 11 o'clocks. But you could back up and go, you know what? There is not 11 o'clock. Is there a 9 o'clock that might be worth it? Okay.
Okay.
And that could be a potential trade for you. Did you when you did the screenshot? Did you happen to have the 9 o'clocks up, or had you filtered them off?
Yeah, I had them all. I had the 8 o'clocks and the 9 o'clocks. Yeah, I had them all up. They were all in the filters. Is it? I was going to.
I'm saying, are they on your screenshot right now?
Yes, they are. Yes.
Okay, cool. So real quick, what were the? I'm assuming the risk floor was probably the same, 89.10.
Yeah, 10. Yep, they were pretty much all the same.
Okay, let me copy this so you don't have to repeat it here in a second. And then, what were? What was your buy price and sell price? On the price on the scanner, you'll see the bid and the ask.
Okay.
Right here. So there's your ask on your buy, and there's your bid on your sell.
Okay. The bid ask price for the 8 o'clocks was 88.97 and 89.02 on the 88.60 to 89.60 spread. It was the bid ask price for the.
What about the 9 o'clocks? 8 o'clocks have been cutting really close. Yeah.
The 9 o'clocks for the 8,900 on the buy to 9,000 was 89.10 to 89.15.
Okay, so the ask price was 89.15. It was an 8,900 strike.
That's correct. Yes, that was a $15 risk on the buy side.
And on the sell side there,
the sell side was that spread was 8,800 to 8,900. The bid ask was 88.84 and 88.89. For a max risk of $16.
Yeah, so even that was outside the range.
Right.
Of expectation. Okay. So now that we know that was outside the range, let's go back and let's look at that 11 o'clock one. Okay? Because I know that was one of your major things was, when did I mess up? No, you did not mess up by not taking it. Because even though it would have this time worked, more often than not, it would not have. Okay?
Okay.
And I mean, you want to play your probabilities, So, I'd rather miss out. One of my favorite phrases one of my mentors taught me in trading. He said, "I'd always wish I have something I don't, as have something I wish I didn't."
Okay.
So, that's sort of the case. You wish you would have got it, but you'd rather wish I would have got it than taking it and wish you wouldn't have.
Good saying.
Yeah, it saved me from some mistakes. It helps with the trading psychology a little bit. And John Netto taught me that. But, okay, so on here, now let's look at an iron condor, because that was your next question, right?
Yes.
Okay, so on the iron condor, we got all the same stats. The only thing let's see, what do we have on the bid-ask spread? What was it, like 3 ticks? That's usually about the bid-ask spread, 3 to 4 ticks on Aussie dollar.
The bid-ask spread for the 11 o'clock, that was 4 ticks, yes.
Okay, so like 89.22 on the buy side was probably the bid?
89.26, 89.22 was the sell, 89.26 was the buy.
Okay, and then on the sell side, what did we have? We had like 88.91?
88.83 and 88.88. I'm sorry, 88.83 in the sell, 88.88 in the buy. So buy side for the sell.
Okay, so buy side was 88.88. Okay. All right, so on this right here, we got these strikes. So there's a couple things to look at. What is just the difference between them? Okay.
Okay.
So if I go right here and I subtract those, I have 34 ticks. All right, that's my difference between the two.
Okay.
The reason I say that is because what that basically means is the market could move 34 ticks higher. Let's see. Now we got 8, 9, 10 on there, so I'm going to have to insert some cells over here. Give you a little room to type. And we'll walk through it, but it's pretty cool. Once you get this down, it's pretty sweet when you see these iron condors, because they're just like, yeah, I'll take that. Okay, so we got 89.22, and basically what that means is there is like 12 ticks of value in there, okay?
Okay.
We got this one right here. We got like 22 ticks of value on the other side, on the short side, because the market's been moving down a little bit, okay?
Okay.
So if there's 34 ticks, if it expires anywhere in between, best way to put this, it could move down 12 ticks from 88.88. Like if it was down, actually it would be in the market's at 89.04. Okay, right now, but the market could move all the way down 12 ticks below 88.88, and let's say it expired there. Okay.
Okay.
You'd be break even on the trade, because you'd have made $12 by selling the one that you would have bought as a straddle. Okay.
Okay.
You would have lost 12 ticks on the one you sold. So, because it went down. Actually, yeah. I'm sorry. You would have made 12 ticks on the one you sold that you normally would have bought. So you inverted it upside down, and it'd be sort of like if I put a graph up to make it backwards, and I got rid of the filters to really make it backwards. We go to here, we'll find ones that have an inverted risk reward, like right there. Stay right there. We'll come back. We'll wrap this up. Okay?
Okay. Thanks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. Dennis, you still there?
There.
Awesome. Okay, so I threw up some numbers here real quick to do the math and get it all done so we can make sure we do get the answer for you. Okay, so if I sold the upper at 89.22 and I bought the lower strike down here, and that's sort of what the risk-reward graph, if you clicked it, would sort of look like this, right?
Right.
So it'll be a little bit higher than what I have. I just want to give an example. Instead of being inverted, it'd be upside down.
Okay.
Okay. And what I know is the most I can make on this one is 22 pips, because that's the difference between that and the ceiling if I bought it. Okay. So I can make 22 pips to hedge off the long side. So the long side could lose $22. Okay. That's why I keep saying long because I get it backwards. The short side could lose $22. The long side would make 22. So this one that I sold short, if it lost $22, but that one made $22, I'd be break even. Does that make sense? I'd be break even up to 89.44.
Yes, absolutely. Yep.
Okay, the short side, I can make $12 on the short side because it's only 12 ticks from the floor, 89.10. I sold at 89.22. Okay.
Okay.
And so basically I have 12 ticks below where I bought the lower spread at 88.76. So I could lose 12 ticks on the one I bought, and since I made 12 ticks on the one I sold, if, let's say, the Aussie dollar expired at 88.76, I'd be break even because I made 12 ticks on the one I sold. I lost 12 ticks on the one I bought.
Okay.
All right. So now what I got to do is I go, okay, well, these are my break even points. Doesn't mean I have to get out right at those points, but that's basically my break even. And so I'll look at two more factors after that if I think it might be a potential iron condor. One is just to see, I'll look, what is that high to low range? So what's that break even on the sell side losing and the buy side making money, and what's that break even on the buy side losing and the sell side making money? So high to low, 68 pips, which looks pretty good, right?
Mm-hmm.
I mean, in first case you go 68 pips. Well, my expectation is 50. That's a perfect iron condor. Except for high to low, I mean, it is high to low after the announcement, but if you've watched these quite a bit, usually it doesn't move up a whole lot. Usually it either moves down or it moves up.
Okay.
So we're sort of expecting that 50 pip move up or down. It may move down 5 ticks and then up 45. It may move up 10 ticks and then down 50 from there and have a high to low of 50, right?
Mm-hmm.
So what I'm really concerned with is my directional range. Okay? Which is basically the Aussie dollar could move down 34 pips or up 34 pips and I would be break even from where it's trading at at this moment. Okay?
Okay.
If I have an expectation of 50 pips of movement, then I sort of have an expectation of losing on the trade. So the long one didn't look good because I couldn't get my 1-to-1. I could hit my break even. I just couldn't hit my 1-to-1. Right? This one right here says if this thing moves 50 pips down or 50 pips up, I'm going to be 16 pips past my break even price. So what I really want is I want this directional range, and I know this is a lot to take in all at once. What I really want is this directional range of break even, if I know it's a great one, to be equal to my expected move.
Okay.
And so hopefully you got a few tips on that one, and if you want some more, we can definitely dive into this even more if you want to call back tomorrow or another day.
Great. Thanks a lot, Darrell.
Hey, man. Thank you. Thanks for calling in. All right, y'all have a great day. Stay tuned. We have another great show coming up for you right after this.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.